Warren Buffett's Berkshire Hathaway just released their latest Form 13F, which reveals every single move he made in his portfolio last quarter. So in this video, we're going to be reviewing all of his moves, talking about his massive cash position, and looking at some key takeaways. So let's go ahead and jump in. To start, let's analyze Warren Buffett's buys and sells. We can see he added to 8 existing positions and opened 3 new ones, and we'll touch on that a little bit more, but he also reduced the size of 6 positions and sold out of 1 entirely. So if we take a closer look at each of these moves, there's a couple things that jump out to me. To start, Pool Corporation. He more than doubled the size of his Pool Corporation position. Now, the reason this is partially interesting is he's now added shares of Pool Corp for, I believe, 4 consecutive quarters in a row. He initially started this position in Q3 of 2024. Now, this is kind of an under-the-radar stock, but over the past 15 years or so, this has been a quality compounder. Let me show you what I mean. If we scroll down here on Forecaster, we can see Pool Corporation had positive total returns from 2009 through the year 2021. That's a pretty mind-blowing statistic. And on top of this, 2019, 45%, 2020, 74% returns, 2021, 58% returns. But the last few years haven't been so good for Pool Corporation, and it's easy to visualize why when you look at the stock price versus the net income over the last 5 years using the tool Forecaster, link in the description. Again, share price follows fundamentals. We can see as net income continued to climb higher, Pool Corporation was hitting all-time highs, then we saw a drastic sell-off as sales started to decline. Now, the bright side of this is in the midst of this, they've been able to continue to grow those dividend payments at a healthy rate. If we look at the valuation of Pool Corporation, we can see that PE on a trailing 12 months basis is relatively high at about 29.37. So this is an interesting move from Buffett. He seems to believe in the turnaround play. If we continue to look at some of these other moves, yes, he added more Domino's Pizza, a position he's been adding for a while. A big one, he added United Health Group, which we'll touch on more here in just a little bit. But 2 of the more interesting sells is he reduced his Apple position by about 6.7% and reduced his Bank of America position by about 4%. Now, we'll touch on Apple here more just a little bit later, but let's take a look at Bank of America. Now, Bank of America is a stock that Buffett has held for a very long time. Holding any of those big American stocks like JP Morgan, Bank of America, is essentially a bet in the American economy. Generally speaking, the more economic activity there is, the more those banks are going to generate in interest income. And the past 5 or so years for Bank of America have been relatively choppy. They claimed all the way up at the end of 2022 to almost $50 per share, then sold off to around $25, $24 per share, and are now back all the way up to around $47, $48 a share. Now, what's interesting about him trimming that Bank of America position is he's doing this simultaneously at the same time as his cash pile continues to grow larger. Just a few years ago, we were talking about how wild it is that Buffett's cash position has hit $150 billion. But his cash position now, and the final number is still to be determined, but it's estimated to be around $350 billion. Obviously, nobody knows for sure the reason that Buffett would trim Bank of America, but it is interesting that he's trimming at the exact same time that his cash position has grown so large. But Buffett's hesitancy doesn't just stop there. This was the 12th consecutive quarter in a row that Warren Buffett has been a net seller of stocks. So here's the rough math, and obviously we don't know the exact timing of when he added these positions in the last few months. So the exact amount of net buying and net selling is more of an estimate based on how those stocks have been trading. But we can see total sales is estimated to be about $6.5 billion and total buys around $3.9 billion. So now 12 quarters in a row, 3 years in a row where he sold more stock than he's been buying. And this comes when the Buffett indicator is at its highest levels that we've pretty much ever seen. Buffett has before stated that this is one of his favorite measures of market valuation. So he's trimming Bank of America, has a massive cash position, is selling more than he's buying, and the Buffett indicator is at a very high level. Again, I don't want to jump to conclusions, but this is interesting. Now, our next takeaway has to do with the housing market. If we jump over to Dataroma, we can see Warren Buffett increased his Lennar Corporation shares by about 265%. Now, some people will also point out that he did trim his D.R. Horton position, which is another home builder, but this trim was less than a 0.01% change to his portfolio, so it's pretty insignificant. Now, what do we know about home builder stocks? Well, these are very cyclical companies. Things like housing demand, economic growth, population trends, government incentives, but especially things like interest rate and mortgage rates can heavily impact these stocks. And what's interesting is right now, the market is currently pricing in 89% odds that we get a rate cut on September 17th when the Fed meets. If we look at Lennar Corporation over the last few years, sales have been relatively stagnant. We've seen very slow growth. And while there's a huge run up from 2022 to 2024, we can see there's been a pretty significant sell-off in the last few months. And keep in mind, this company's trading at a PE multiple over the trailing 12 months of just 10.93. And of course, we need to note that as of June of 2025, there were 508,000 more US home sellers than US home buyers. This is the largest discrepancy between sellers and buyers that we've really seen since around June of 2014. Now we need to get to that other sale that was so interesting. He's selling Apple once again. Now, he stated around a year ago that he was trimming his Apple position for tax purposes, but I'm not so sure that's the case anymore. We can see he started reducing this position in Q4 of 2023 with a very small reduction of Apple stock, but then a more significant one in the next quarter, a massive reduction in the next quarter, another massive reduction in the next quarter, and then in Q1 of 2025, there was finally no change. And I think the assumption was he was finally done selling Apple, but in the most recent quarter, he reduced his Apple position again by 6.67%. So his Apple position has gone from about 51% of his portfolio to around 22% in less than 2 years. Now, here's the problem that people are currently facing with Apple. Apple's obviously a phenomenal company. They've delivered phenomenal returns over the decades. We can see in the last 5 years, they're up about 100%. In the last 20 years, up over 13,871%. It's one of the greatest companies of all time. But look at what's been going on with their sales over the last 4 or so years. There's been very little growth. Look at the net income. Again, very little growth. Now, the problem people have with this is when you look at the valuation of the Mag 7 companies, stocks like Google trade at 22 times earnings, Meta around 28 times earnings, Amazon 35, Microsoft 38, and then we have Nvidia and Tesla at much higher multiples. These are great companies, and they're valued at high multiples because they're great companies and also because they're expected to grow earnings at a very high rate in the future. Stocks that grow earnings at a high rate warrant higher price to earnings multiple. But the problem with Apple right now is they're valued at a high PE ratio. We can see the fundamentals here on Forecaster around 35, but the earnings aren't really going anywhere right now. In fact, a lot of their EPS growth is being fueled by share buybacks. And also to be clear, when it comes to insiders, insider selling doesn't necessarily mean the stock is overvalued. Insiders could sell for a multitude of reasons. But it is interesting, if we look at all the transactions, we only see sells. We don't see any buys of this stock in the last couple of years. And like we already know, Warren Buffett has been selling this stock as well. So yes, Apple a great business, but there's clearly some concerns, and Buffett has reduced his position enough where I definitely think it has more to do than just tax purposes. Now, our sixth key takeaway is pretty straightforward. Yes, Warren Buffett is probably the greatest investor of all time. He's been outperforming the market for decades, but the law of large numbers is starting to kick in. What does this mean? Yes, he's outperformed the market in every single decade, the 60s, 70s, 80s, 90s, 2000s, and the 2010s, but we can see in each decade that annual outperformance has started to dwindle. Now, this is obviously still extremely impressive, but he's not been delivering that same outperformance that he has been historically speaking. Point number 7, concentration builds wealth, but diversification protects it. Buffett currently has around 41 different stocks in his portfolio, but with that being said, 87.3% of his portfolio is simply in his top 10 stocks. So pretty heavy concentration to those top 10 positions. And then point number 8, we come to UNH stock. This was by far the biggest news in Warren Buffett's most recent 13F filing, and in fact, this was actually the largest purchase he made at about 5 million shares. You can see that position right here, again, added around 5 million shares, and by percent change to his portfolio, this was the largest purchase he made. And obviously, like you probably already know, there's a huge disconnect in the underlying fundamentals with UNH stock versus their stock price. Here's what's been going on with their sales, but look at the share price decline in just the last few months. Now, obviously, there's a reason for this. They're currently being investigated for fraud, and if they do find fraud, there's no doubt they could certainly go lower. But here's what's interesting. Nobody knows better than the insiders what the actual outcome of this investigation will be, and we can see we have chief executive officers, CFOs, directors on the board, all buying stocks. There's been a lot of insider buying, and now on top of this, we have Warren Buffett buying the position as well. If we jump over to the political tab here on Forecaster, we can see for the first time in the last few quarters, there's actually been more buying of UNH stock than selling. And if we look at the historical valuation, we can see, for the most part over the years, that PE ratio has typically sat anywhere from around 21 to 24. It's now currently sitting at just about 13. So yes, huge disconnect between fundamentals and the share price. The reason has been there's a lot of fear with what's going on internally with the company. But we're seeing Congress members buy, we're seeing insiders buy, and now we're seeing Buffett buy. It doesn't mean that this stock is in the clear yet, but it's certainly giving investors a lot more confidence. Point number 9, Buffett is still betting on financials and tech. So yes, he trimmed positions like Apple and Bank of America, but financials and technology still make up about 61.67% of Buffett's entire portfolio. He still favors those sectors. And then point number 10 is reviewing his entire portfolio as of this most recent filing. Again, he now has 41 different positions. He reduced 2 of his largest with Apple and Bank of America, added some Chevron. He reduced his DaVita Healthcare Partners position. He continued to add to Constellation Brands. The new buy, UNH, continues to add to Domino's, Pool Corporation, Nucor, and Lennar. He heavily reduced Charter Communications, and then all the other moves were only about 0.1% of his entire portfolio, so relatively small moves. So there you go, those are 10 key takeaways from Warren Buffett's most recent 13F filing. I used Forecaster to analyze these stocks, so you can check them out at the link in the description. Also, be sure to check out my newsletter over at dividendology.com. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.